Welcome to Leveraging Digital Technology to Address Weather-Based Risk. We're happy that you're joining us for the first webinar in our Research to Action for Resilient Agriculture series, which runs through the month of October. My name is Jenna Foley. I'm the Agricultural Manager at the Center for Effective Global Action, or CEGA, at UC Berkeley. And we're fortunate to have three distinguished speakers joining us today who research how digital technologies can improve farmers' welfare, particularly by helping them manage weather-based risks that pose an increasing threat to productive agri-food systems worldwide. Before we dive in, I wanted to share a few quick housekeeping items. So first, we have 60 minutes for 3 presentations, and we'll have an open Q&A session after all presentations are complete. You can use the Q&A feature to submit your questions throughout the session, and we'll address as many as we can during our panel discussion at the end. Second, today's session is being recorded, and we will share the recording after the webinar. And finally, third, this is the first webinar in our 3-part series. We encourage you to sign up to attend the second and third sessions via the registration, which one of my colleagues will drop in the chat. Before we dive into today's presentations, I want to share some information about CEGA's agricultural program. We co-manage 2 agricultural initiatives with the Abdul Latif Jameel Poverty Action Lab. Together, our joint mission is to generate rigorous evidence to test new ideas to promote take-up of agricultural services, boost farmers' profits, manage agricultural risks, and better link farmers to markets. Our Digital Agricultural Innovations and Services initiative specifically focuses on the role and rise of digitalization and bundling in agriculture. And we think about our work in 4 pillars. First, we seed new ideas and innovation by supporting research projects through competitive research calls. Second, we summarize and aggregate evidence to ensure rigorous academic research is accessible to broad audiences. Third, we normalize open science principles. For example, we host an open data portal where you can download harmonized data from 29 projects in the portfolio. And finally, we invest in capacity and ecosystem building of scholars from low and middle income countries through JPAL's Regional Scholars Program and CEGA's Global Networks programs. I should note that our first presentation features research that was funded through our Agricultural Technology Adoption Initiative, which is supported by the Gates Foundation and FCDO. And while Berber's work on picture-based insurance and digital green is not funded through our agricultural initiatives, they are leading voices on this topic. And so we're so thrilled to have this conversation with them today. So with that context, we're going to dive into today's presentations. And I'm really excited to welcome Fiona Burlig, Assistant Professor at the Harris School of Public Policy at the University of Chicago. Fiona is an applied microeconomist with research interest in and at the intersection of energy, environmental, and resource economics and development economics. Fiona will share results from an evaluation of a digital service that provides long-range seasonal forecast information. Excited to welcome Fiona to present.
Great, thank you so much for having me. It's really fun to be here. We can see the screen. Okay, great. I'm going to share some work that I've been doing with a bunch of colleagues from U Chicago and the World Bank, generously funded by ATI and JPAL. So as a kind of backdrop to this project, I don't think I need to convince anybody here that agriculture is super important, especially in low and middle income countries as a massive employer, as well as a huge producer of GDP. But of course, if you're a particularly smallholder farmer, your entire livelihood depends on the weather. And that means that your decision-making process is really quite complicated because you need to make large investment decisions like, am I going to farm this plot of land? What crop should I grow? How many people should I hire in to work on my farm? Usually well before you actually know whether it's going to end up being a good growing season or a bad growing season. That means that farmers are overwhelmingly dependent on what their beliefs are about the weather. And this puts them in a tricky place because it can be really hard to predict whether this coming season is going to be a good year or a bad year. And that's getting even harder as weather becomes more variable under climate change. That we think presents an opportunity, which is if we could provide a really high quality forecast about kind of the full duration of the growing season, we might be able to really improve farmer welfare by allowing farmers to better optimize their investments to the state of the growing season. So if it's going to be a bad year, maybe I do a little bit less on the farm and kind of do some subsistence farming, but invest otherwise outside of agriculture. If it's going to be a really good year, maybe I go really all in on my cash crops. You have to make that decision with limited information in the status quo. But the idea here is if we could provide you with a high quality weather forecast, maybe we could make that decision-making process easier. So one thing that we think helped motivate this project that we're going to do is when we went and surveyed farmers about their beliefs about when the monsoon in India is going to begin, and it's going to turn out that the monsoon is a really important determinant of how good the season is going to be. To first order, an early monsoon means a better growing season, a late monsoon means a worse growing season. It turns out farmers are kind of all over the place about when they think the monsoon is going to start. So the average farmer is actually correct, but there are a bunch of farmers who are very overly optimistic, thinks this monsoon is going to start much earlier than it actually will. And there are a bunch of farmers who are overly pessimistic. And so the goal here is if we can correct these people's beliefs, can we help them make better decisions on the farm? Those beliefs aren't just something we can measure in a survey. They turn out to be really important in driving behavior. So this is looking at those same farmers and now asking, how do their investments correlate with those beliefs? So on the left of the screen, you see these overly optimistic guys. They are going really all in on the farm, farming a bunch of land, putting cash crops in the ground, etc. The guys on the right of the screen are these pessimistic folks, and they're doing much less farming. So we see this strong downward sloping relationship between how pessimistic you are, so how late you think the monsoon is going to be, and how little you're investing. So the further to the right you are on this plot, you think the season is going to be worse, and you invest less accordingly. So what we're going to then do in this backdrop is introduce a new long-range weather forecast via a randomized trial. So the thing that's neat about this forecast is we think this is a major technological advance over previously available options. I should say I'm not a climate scientist, so we are borrowing this forecast from people who know what they're doing. But the idea here is that this is a forecast that's going to tell farmers in India when the monsoon is going to arrive. It's designed to be useful over agricultural regions. So a lot of previous forecasts work really well over the very southern tip of the country, but that's not where any of the farming is happening. This forecast is issued well in advance, so allows farmers to actually make meaningful input adjustments. If I tell you tomorrow, hey, the monsoon is going to start tomorrow, that's maybe not so useful, but being able to tell you 6 weeks ahead, you can actually make some changes. And this forecast is also highly accurate. It's been correct 10 out of the last 10 years. What's extra nice about this is a very simple piece of information. The monsoon is going to start on date X, plus or minus an uncertainty range, which makes it really cheap to disseminate in theory. And as the climate changes and the monsoon onset timing becomes more variable, we think that the forecast is going to continue to be effective because the underlying physics of the problem isn't changing, just the kind of inputs to that physical model are changing a bit. So we're going to test out this forecast by randomizing 250 villages in Telangana, India. And we're going to randomize at the village level. So some villages are going to get no forecast information. We'll just do surveys with them, where other villages are going to receive forecast information. Randomizing village by village rather than individual by individual is important here because we want to make sure that people aren't sharing information between the treatment group and the control group. So what we're going to do then is compare people in forecast villages who get our information to people in control villages who have access to everything they would have had in the status quo, but not this brand new forecast. The first thing to tell you is that the forecast is effective at moving farmers' beliefs. So there's a lot going on this plot, but what I basically want us to focus on here is the gray line, which is the beliefs of the control group, and then the purple line, which is the beliefs of the forecast group. And what you can see is that the forecast group's beliefs are shifted to the left in the direction of the actual forecast. This suggests that farmers who received the forecast from us, believed that forecast and shifted their beliefs in the direction of the information. So that wasn't actually ex ante obvious to us. Like if I just show up in your village and say, hey, I have brand new information about this thing that's central to your growing prospects, like you might not actually believe me. It's important to note that this wasn't me showing up. This was ICARSAT. So we partnered with a trusted organization in the region to help increase trust in the product. But nevertheless, giving out new information for the first time, it's not actually obvious that people would listen. So this is a kind of good sign that they do. Okay, so now we've given people forecasts and changed their beliefs. What does that actually do to their behavior? In order to understand this, I'm sorry, I need to show you a little tiny bit of economic theory. So the idea here is just that how you should respond to a weather forecast depends on what your beliefs were in advance of receiving that forecast, right? So if I was a very optimistic person, I had a very early prior about when the monsoon should begin. You tell me, hey, actually, the season is going to be a little bit worse than you thought. This is going to be an average year. Then what I'll do here is be on the negative side of this graph. I should reduce my investments in agriculture relative to my counterpart in the control group, because that guy is really optimistic and doesn't know that the weather is worse than he thought. So he's just going to go all in. Whereas I've now learned, oh, the weather is going to be a little bit worse than I expected, so I'll do less than I otherwise would have. Similarly, on the right of this graph, if you are somebody who believed the season was going to be pretty poor, you learn that the season is actually going to be average, that is better than you expected. You should respond to that by investing more on the farm, doing more agriculture. Okay, so we're going to be looking for this pattern in our treatment effects. People who had early prior should be investing less. In the middle, you were correct, so you shouldn't be changing your response. And then people on the right here had late priors and should be investing more on the farm. So then what we're going to do is take this question to data. After we've run a randomized trial, we can actually look at what farmers did. And what we see here is exactly following that pattern. In terms of cultivated land, folks who were overly optimistic and therefore had their beliefs corrected that, hey, this is going to be a little bit worse than you thought, do less farming. People who thought that this was going to be a really bad season and learned it would be better than they thought, do more farming. We see that on a bunch of domains: land under cultivation, cash cropping, expenditure, and then we can aggregate that up into an overall investment index. And I should point out that these effects are quite large. You should think about them sort of a similar magnitude to what happens when we give farmers index insurance. That's a much more expensive technology to put into place. And so here we're actually seeing quite large movement based on people updating their beliefs in response to this forecast. Interestingly, the opposite thing happens when we look at investments off the farm. So this suggests that farmers are treating non-agricultural business as a hedge. People who thought that it was going to be a really good growing season and were surprised in the negative direction actually do less on the farm, but they do more off the farm. And correspondingly, people who are going all in on agriculture do more on the farm and sort of less in their off-farm business portfolio. Finally, does this translate to overall improvements in well-being? Yes, these are a little bit noisier, but what we see is pretty meaningful increases in food consumption, so around 7% in total. Some noisy but positive suggestive evidence of increases in asset values and net savings. That's largely driven by people not taking out unproductive loans. And so when we aggregate this all again into a welfare index, we see increases in overall welfare that are somewhere between the overall effects of kind of providing people with loans in really bad states of the world or providing people with novel irrigation technology. So given that this is a very cheap technology to disseminate, we think that these positive welfare effects are encouraging about the potential for forecasts to be useful overall. So to just wrap this up, one thing that's been really exciting about this project is we think that this pilot was pretty successful, this randomized control trial, but we wanted to go beyond that RCT and actually now think about, will this work at scale? So we've been building on this work in two ways. One is in the 2024 growing season. We actually ran a randomized experiment at really large scale. So we randomly sent 1 million farmers in Telangana text messages in collaboration with the Indian government, and are doing that in a randomized way. And so we can try and measure treatment effects on things like prices that wouldn't necessarily move if you give information to a few farmers here and there, but if you start to give information out at the state level, might move. And then based on the kind of initial success that we've had so far, this past year, actually, colleagues of mine have taken this kind of even larger, built a new AI-based forecast to provide to many, many, many more farmers. So the forecast was ultimately disseminated to around 38 million farmers this year, and the plan is to scale that even further in collaboration with the Indian government. So excited to hear your thoughts and questions. Thanks so much.
Thank you so much, Fiona. As Fiona said, please add your questions into the Q&A at the bottom of the screen. Next up, we're thrilled to host Berber Kramer, who is a Senior Research Fellow in the Markets, Trade, and Institutions Unit at the International Food Policy Research Institute, based in Nairobi, Kenya. Berber's research focuses on financial inclusion, technology adoption, gender, and adaptation to climate change. She leads a research program that aims to strengthen agricultural insurance and finance in Ethiopia, India, and Kenya through digital innovations in the design of financial services. And today she is sharing results from two separate studies that occur in Kenya and India on picture-based insurance. So welcome, Berber.
Thank you so much. Yeah, and also great that Fiona was going ahead of me. I think that was a very nice sort of motivation also for the work that we're doing. And to show that weather-based risk forms a major barrier to agriculture investments. And so a lot of the work that we do is trying to find ways and solutions to help de-risk agriculture and thereby improve investments, whether that's through information or in this case, through insurance. Now, in insurance, there's challenges in providing insurance to smallholder farmers, and there's several reasons for this. One is if we're looking at the standard insurance that you might have, indemnity-based crop insurance. Let's say you have your car insurance and you get paid based on the actual amount of damage if you get into an accident. That type of insurance is very difficult for smallholder farmers' crops because of what we call asymmetric information, that the insurer is unable to see everything that's going on the farmer's end. And this introduces things such as moral hazard, that farmers might underinvest in their crops, and insurance providers wouldn't know whether it's underinvestment that led to crop damage or actual natural causes. And so it's difficult then to see should this farmer be receiving an insurance payout. Also adverse selection, which means that higher risk farmers or might be enrolling insurance, or that farmers might be enrolling their higher risk crops in insurance. And farmers know that these are higher risk crops, but insurance providers not necessarily. So that's one challenge in the provision of indemnity-based crop insurance. Another one is simply that smallholder farmers are trying to insure relatively small amounts of land, and the transaction costs of insuring them, and also for insurance providers then to verify any insurance claims later on, are just disproportionately high compared to the sums that farmers are trying to insure. So that's a main challenge with indemnity-based crop insurance. And so although indemnity-based crop insurance was up until the early 1990s the main way of providing insurance, many of these programs were highly unsustainable and subsidized. And that led to an increasing popularity of index-based insurance. And index-based insurance settles claims using objectively verifiable data from what we call an index. For instance, this could be a weather index measured through rainfall stations or satellite remote sensing, or it could be the average yield in an area, which is measured through sampled plots where crop cuts or yield measurements are being done, and then constructing an average and seeing if that average goes below a historical threshold. Now, the problem with this is, on the one hand, it's great because farmers can't control the index, and so you don't have this problem of asymmetric information. It's fully observable for both farmers and insurers. But there's a challenge of basis risk. And basis risk essentially means that the index does not fully capture crop losses. And so as a result, farmers might experience losses, whilst the index insurance doesn't trigger any payouts. And so then the farmer might even be worse off because they have spent money on an insurance policy, incurred damage, and are not receiving a payout. So there's multiple reasons for why such type of basis risk could occur. One is spatial risk. For instance, risk exposure might vary across spaces. In mountainous areas, or if you have microclimates, you can have rainfall on one side, no rainfall on the other side. And that could mean that some farmers have a better correspondence with the index in terms of their losses compared to other farmers. Then there's also temporal variation in terms of when farmers are planting, which introduces variation in how accurate an index is. And finally, design risk, that an index or a model cannot capture all risks perfectly or perfectly predict damage. So what we're doing in this work, when looking at picture-based insurance, is saying, hey, can we actually use digital technology to improve the information that insurers providers have on farmers' practices and on what's happening in the fields, and thereby actually combine the best of these two worlds, indemnity-based crop insurance and index-based insurance, and build a sort of hybrid product that allows farmers to get compensated for visible crop damage using digital technology, now that we have so much cheaper ways of monitoring farms. So the digital innovation is then insuring against visible crop damage. Picture-based insurance settles claims based on smartphone pictures of insured crops, as the name says. And it works as follows. So farmers download a free app onto their smartphones, or an agent that might be acting on the farmer's behalf. Within the app, then they can enroll the sites that are meant to be insured. And then to minimize tampering, from sowing to harvest at regular intervals, repeat pictures are taken of that same portion of the plot to track whether farmers are applying the right practices, and also when there's damage, to now be able to take close-up pictures of that damage. These pictures are being assessed by experts to verify crop damage. This is a lot cheaper than sending somebody into the field, but it reduces basis risk compared to when you have index insurance. Now, initially, we had a process with agriculture experts, but over time, we're using deep learning to automate image processing. And when I say we, I should say our partners. And a formative evaluation in India demonstrated the feasibility of this approach. So that's sort of the innovation. Now, today, I'm going to be presenting findings from 2 randomized impact evaluations to show what the impact is of this innovation on both take-up compared to index insurance, as well as agriculture investments in Kenya and India. And that work was funded by a program called Cultivate Africa's Future in Kenya, which was funded by IDRC and ACIR. And in India, the work was funded by 3IE, the International Initiative for Impact Evaluation. All right, so the first study was a randomized trial in Kenya in the 7 counties that you see here. It was an insurance product for maize, sorghum, and green gram, and the sum insured was equal to the cost of seeds. So primarily, the aim was to de-risk investments in seed. The premium was 10% of the sum insured, which seems to be sort of on the standard end for these index insurance products. So it's not necessarily that they are much cheaper than indemnity products, but just they're a lot more feasible. 180 champion farmers. So we had champion farmers providing the insurance and taking the photos. And there was 1 champion farmer per village. So we had 180 villages. And they were assigned to a control group, a weather index-based insurance group, and a picture-based insurance arm. And in the control group, champion farmers just did picture-based monitoring, so sending in photos of targeted crops. And in the weather index-based insurance arm, they would do so as well, but farmers received free trials of a weather index-based insurance product. And in the picture-based insurance arm, farmers received free trials of this new picture-based insurance product that settles claims based on visible crop damage. So free insurance trials were provided for 3 seasons in these 2 treatment arms, weather index-based and picture-based. And then in the final season, the 4th season, our implementing partner, Acre Africa, they actually sold the product. And they would sell weather index-based insurance in the control group that hadn't received free insurance trial, and also in the weather index-based insurance arm. And then they sold picture-based insurance in the picture-based insurance arm. So this means that we can compare across treatment arms to look at what is the effect of changing the way that claims are being assessed and that insurance payouts are being made. Does this improve? Does take-up improve when you move to picture-based insurance? In the weather index-based arm, I should add that premiums were subsidized. So, and the same in the picture-based. So when we are comparing the control and the weather index-based arm, we're actually looking at not just the effect of having received free insurance trials for 3 seasons, but also the effect of subsidies. So I just want to put that out there. So let's look at the results. And this is Kenya. So we're finding that picture-based insurance increases insurance take-up, and by quite a bit, and especially among female farmers and in what we call arid and semi-arid lands. And so these are countries that are relatively drier. So that's where we really see the large effects of picture-based insurance, and demand increases by more than twice the baseline amount. We also see that these findings are mostly explained by improved insurance perceptions. So farmers in the picture-based insurance treatment arm especially, compared to those in the control group, trust insurance better. They find the product more available. They find it easier to understand, those kinds of things. And even compared to the weather index-based insurance arm, where they also received free insurance trials. We also see impacts on investments, and especially around fertilizer use, again in those semi-arid areas. But interestingly, we see that some of the larger effects are concentrated among male farmers. And then this is especially driven by the weather index-based product. And so not by the picture-based insurance product, where we see the strongest effects on demand. We have some suggestions for why this might be the case. We're still looking further into it. But one potential explanation would be that there's a weaker incentive to use fertilizer if a farmer is insured through PBI, through picture-based insurance. So we still see that picture-based insurance increases the use of fertilizers, but not as much as weather index-based insurance. And this could be a potential moral hazard. That a farmer might say, why would I increase investments in fertilizers if my crop damage if I have crop damage, I get an insurance payout? But perhaps more importantly is that we actually find a change in the types of farmers that are enrolling in insurance when we offer picture-based insurance. It is attracting clients that have less decision-making power. And so it could be that we don't see as strong effects on fertilizer use because these are clients that are not necessarily having the power to make decisions over fertilizer use. Okay, let me quickly jump to the second study. This is a study in Odisha in India, where we're looking at a credit scoring approach that uses digital technologies and then uses picture-based insurance to insure the loans. This product does not rely on land records, whereby you can help overcome credit rationing. And we've been seeing, as a result of that, now farmers that don't have land titles can start borrowing for the first time. The study is situated in Odisha, where a lot of farmers do not cultivate in the winter, in the Rabi season, and we have a lot of sharecroppers who do not have access to land titles. They sharecrop land, and so it's difficult for them to access government credit and insurance. Here we have an impact evaluation of the bundle of credit and insurance over 3 seasons. So we're not looking at insurance itself, and we do that in a follow-up project that I can say a little bit more about if people have any questions. We have a randomized treatment design, very simple, 29 treatment villages with the bundle of credit insurance digital, and then 29 control villages where farmers only have access to conventional schemes if they have land titles and can apply for that. So what we find is that we see very strong positive effects on different indicators around the use of credit and insurance, and also the terms at which these products come. So we see among various types of farmers, regardless of the types of credit rationing that they might be exposed to, regardless of their gender, we see that farmers are more likely to take up credit from formal sources. They are more likely to take up insurance, and they have better understanding of what that insurance product does, how it works, with better insurance knowledge scores. We also see that farmers are less likely to take credit from informal sources. So in a way, there's a bit of crowding out. But loans come at much better repayment terms, as farmers report facing less difficulty in repayment as a result of having been offered this credit insurance bundle using digital technologies. I think interestingly, especially for female farmers, and the red bars are switched to the right a little bit, but if you look at the blue bars here, that I was meaning to circle with those red circles, we see that for women, there is not as much crowding out of the use of informal credit. And so especially for female farmers, this is actually crowding in a credit and a net increase in overall borrowing. We also see that taking out these formal loans improves profitability in agriculture for both women and men, and we find very large treatment effects. So about $100 increase in profits per acre in the monsoon season, the Kharif, and even more $145 in the winter season, the Rabi. And finally, we see a positive impact on women's agency and mental health. And so this is suggesting that these digital products can really help unlock new financial services for farmer populations that were previously excluded from having access to good services, and that digital innovations, insurance, product design can thereby really help reduce smallholder farmers' exposure to production risk, improving their livelihoods and well-being in a meaningful way. Thank you.
Wonderful. Thanks so much, Berber. We'll be answering Q&A for Berber after this final presentation. Last but not least, welcome Tatyana Zelinska. We're so thrilled for Tatyana to join us to provide an implementation perspective. Tatyana is head of monitoring, evaluation, and learning at Digital Green. Originally from Ukraine and trained as an economist, she has spent 10 years leading impact evaluations, user experience research, and analytics projects for a number of social impact organizations. Welcome, Tatyana. We're thrilled to host you for this presentation.
Thank you so much. I think my presentation is going to be very different in nature. As Jenna mentioned, I'm going to offer an implementer's perspective. So next slide, please.
Jenna is back on the call and she'll be sharing your slides very shortly.
Thank you so much. So let me just start out by telling you a little bit about Digital Green. Digital Green is a global nonprofit organization with a mission to create a world where small-scale farmers use data and technology to build more prosperous communities. And the core problem that we're trying to solve is that smallholder farmers often lack access to accurate, reliable, and timely information on best agricultural practices and new technologies that can help them to increase their yields and incomes. And the existing public advisory systems, which depend on this networks of extension agents, oftentimes are kind of top-down, they're inefficient, and mostly they fail to reach small-scale farmers. So when Digital Green started in 2008, we introduced a community video approach, essentially training extension agents to create short videos that featured local farmers demonstrating how to apply these improved practices. And then these videos would be screened in a group setting and farmers would discuss them and kind of learn from each other. And over years, as we scaled this peer learning model, it delivered very promising results, as you can see on this slide. But at the same time, we recognize that we are only partially addressing farmers' needs because most of their information gaps were dynamic in nature. And one such critical need is weather-based advisory. Next slide. In fact, as you all probably know, most of the 500 million smallholder farmers do not have access to reliable weather information. It's very critical for them because mostly agriculture is rain-fed, and accurate weather information is a critical input at each stage of the production cycle, from preparing land to harvesting. And they have very little room for error. One recent study in Nigeria, I believe, found that delaying sowing maize by just a few days can result in 50% loss of yield. So the impacts can be quite devastating. At the same time, because of complexity and uniqueness of atmospheric dynamics in the tropics, traditional forecasting models can be very ineffective. And also the way this information is shared, typically through radio broadcasts, means that a farmer may not have a clear understanding of what action he or she needs to take at their specific location. And of course, climate change exacerbates the situation with more erratic and unpredictable weather patterns. So we believe that AI technology offers new opportunity to better serve smallholder farmers' needs, including addressing weather-related risk. And in 2023, Digital Green pivoted, and we introduced AI-powered agricultural assistant that's called Farmer Chat. So Farmer Chat is an open source AI-powered application that allows farmers and extension workers ask questions on their smartphones in their native language. And they can use text, audio, or photo input, and they can get a response in text and can also play a response as audio message. And also drawing on our previous community video work that I just mentioned, responses can also integrate some of the relevant videos. And so farmers can also see themselves or their peers in this educational content. So currently we have a pretty strong user base across 6 countries. 4 countries are core geographies: India, Kenya, Ethiopia, and Nigeria, and around 300,000 users. Next slide. So I think what makes Farmer Chat unique is not that it just can answer questions, like ChatGPT can do that, right? So what makes it truly unique is that first, it understands local dialect and local terms, and we work really hard to improve the language model, especially for low resource languages. Also, it is enriched with some deterministic models like crop calendars and retrieval augmented generation. We also have some information about the users, so we can personalize some of the information, and I'll speak about this in a moment. And finally, we can integrate some of the dynamic data like weather, and hopefully in the future also market-related information. Next. So let's dig a little deeper into how weather information is available to Farmer Chat users. So first, we have a weather feature, which is one of the first features that we built based on feedback that we received from farmers. You can see what the home screen looks like with a weather forecast being featured prominently. And if you click on Get Weather Advice, you get a 3-day more detailed forecast. But it's not just a forecast. It also has a farmer insight, like an action that a farmer should take based on their weather information and their location. However, there's also a trade-off that we're kind of facing with a provider between accuracy and cost. So currently the information is refreshed only once a day, and so at times it can be inaccurate. But refreshing it more frequently is more costly. And also in terms of the design, it can probably be optimized, because currently it does require a user to click on that button, the green button, get weather advice. So next slide, and actually the usage of the feature has dropped slightly from the early introduction, and currently it's around 5 to 8%. This is just for the weather feature. Next slide. And what we hear from the users, this is from qualitative research, really interesting, largely positive feedback, but it also varies by country. So for example, in India, there are some alternatives to get localized weather forecasting through SMS, for example, and there is a clear need for accessing weather for future planning decisions, not just for short-term needs. Whereas, for example, in Nigeria, where there aren't like really good alternatives, even short-term forecast seems to be very much valued by the users. And overall, the challenges that we're facing still relate largely to accuracy of weather forecasting. That's local, and there is a big risk again, right? So if for example, it rains and the app predicted no rain, and a farmer decided to apply fertilizer, right? Then in that case, that's a big loss, and we can also lose that farmer's trust in the entire app as well. So we constantly exploring ways to improve accuracy in a cost-effective way. Also, awareness of the feature is low, which in part explains kind of low usage rates. In addition, we also realized that some users, they don't know how to update their location properly. So they may have downloaded the app in the town, but they live in a village. And so that results in some inaccuracy, but the location icon that's familiar and well-known to us, it's intuitive to us, may not be so intuitive for farmers. So how can we improve the design with kind of farmer mindset and something that's accessible and relatable to them, right? And finally, interpretability is very important. So it's in some way easy to share information about wind speed and chances of rain, but how is this information actually helping a farmer, right? They need to know how to interpret this information and to make it actionable for them. Next slide. And in a way, we're making progress towards the goal of interpreting this information and making it more actionable. So another way in which farmers can get personalized advisory that integrates weather information is through notifications that are sent regularly. So currently, these nudges or notifications are personalized because we are able to integrate information about user profile, whether they're farmer extension agent, their crop mix, and weather integration. We will plan to roll it out across all the geographies. Currently, it's only available in Nigeria. An example of what this looks like is here. Without personalization, you can see that the message is pretty generic. It's just designed to remind users about the app to get them back into the app, right? And with personalized advice, there is a clear action, and it's designed to not just remind them about the app, but to actually change behavior, right? And with personalization, we saw click-through rate increase significantly, suggesting that users do find this personalized information much more beneficial. And current challenges, again, are related to costs. Also, accuracy significantly drops for non-main crops, and when we use low-resource language for translation. Currently, we're using chat history to make the prediction about the crop, for example. But what if we need to expand the scope, right? If someone wants to experiment with a new crop, for example, how do we do that? Next slide. So just to sum up what I discussed, I want to show you this heat map of queries that farmers send to Farmer Chat, which by itself, I think, is really interesting data, and it's grouped by major categories. So it's interesting that there is definitely seasonality, right, in the type of advisory that farmers demand. And interesting, for example, that majority of questions are about managing pests in crops. So I think we can all agree that, you know, tailored, timely weather information can support farmer decision and deliver value, but it also needs to fit into farmers' decision cycle and kind of cover an entire season. So basically what we hear from farmers is that they don't just want weather, they want to know, what should I do this week for my crop, given the forecast and the crop stage, right? Or, for example, given that there is a high likelihood that there is a drought this season, should I purchase, you know, drought-resistant seeds, for example? So we also want to, you know, going forward, understand how to be more proactive in delivering information that farmers need through personalized nudges that I described today. And it's a first step in this direction, but we need to continue to kind of make it more cost efficient, and also integrating weather information into a larger advisory ecosystem can make it more impactful. So how do we link, again, for example, rain forecast with a sowing window, right? Or how do we offer rain-based insurance product, what Barbara also presented about, as part of advice that's available, maybe even through Farmer Chat in the future, right? And finally, I think it's important to note that this is not like fully replacing humans, and it is still important to have extension agents. In fact, we are finding that Farmer Chat is helping to unburden them because they can focus on answering more complex questions that farmers have, and also help to interpret information from Farmer Chat and provide that additional kind of trust that's needed for digital products. And in terms of our next steps, this is a bit of our research agenda. So as you saw, like, I'm not presenting yet any RCT results, but we do have 2 RCTs in the pipeline that will test Farmer Chat more rigorously. In addition to that, we are continuing internally to build our muscle to run A/B tests, for example. We will also explore different user learning strategies that users have and how that can help predict which users benefit mostly from which nudges. And we also want to introduce empathy to how Farmer Chat communicates and responds to improve trust and engagement for our users. And this is all I have. Maybe final slide. Yes, please check out the Farmer Chat. I think slides will be available later. Thank you so much.
Thank you, Tatiana. Yes, we will be sharing the recording. So we have about 10 minutes for a conversation. I'm going to batch questions into 2 or 3 questions, and we'll get through as many as we can. So keep adding to the chat. Okay, so for this first batch, I have 3 questions for our panelists. The first is about credibility, accuracy, and trust of AI models. Edgar had a really great question in the chat that was targeted towards Fiona's presentation, but I think everyone here would have a really great perspective on this. So this is really important because AI models could be wrong, and so there is risk to that in providing the wrong information to users of these services. And a second reason could be that, you know, trust in services begets use of services. So we have an incentive for people to trust the digital services that are provided to them. Tatiana talked a little bit about providing percentages to show transparency in the prediction, but of course, then there's a trade-off, as she mentioned, between accuracy and interpretability. So the first question would just be to the panelists on, you know, how you handle these issues of credibility, accuracy, and trust. The next question is from Anna. She had a question about access to Wi-Fi, and I think this is a great thing for everyone to comment on, of course, we know about fundamental challenges of the digital divide. Digital solutions require phone access, but there's a lot of barriers for farmers, from lack of ownership, literacy constraints, gender disparities, unreliable connectivity, as Anna mentioned. So if you could comment on the digital divide and how central this is to your work, the kinds of approaches that you've taken to address it. And then the third question is from Raisa about external validity. I think this would be a great question for the researchers here, Fiona and Berber, the research presentations. If you could comment your thoughts on external validity of your findings in other countries. And I will leave it at that and let whoever decides to open first to tackle one of those questions.
I can hop in quickly. Yeah, I think these are great questions. So on the trust, I think this is a super important problem. I think we take an approach that's sort of similar to Tatiana. I didn't show the actual forecast in the slide deck, but basically we provide information that says the monsoon is expected to arrive on date X, plus or minus a few day range, and some accuracy statistics about how well this forecast has worked in the historical past. So we're not just telling you the monsoon for sure is showing up on June 19th. And no other context. We want to provide at least a little bit of information to help engender that trust. I also think that's potentially a good reason to move a little bit slowly and make sure we're doing good evaluations of the underlying technology as well as the dissemination, because you want to make sure that the new AI tool or the new forecast you're handing out actually does work quite well before we start putting it into the field. Because I also share some of these concerns about you provide bad information once and then it turns people off for a long time, right? So, I think being transparent about the information you're providing, but then also being confident that you're providing useful information are two effective pillars there. Quickly on the digital divide. So for us, the forecast is short enough that SMS based works quite well. And that I think we're, in a place, at least in India, where cell phones are widespread enough that we are not really excluding a large share of the population on that dimension. But I do think there's some questions about, there's been some interest in upgrading forecast dissemination to also include videos over WhatsApp and provide more engaging presentations of some of this kinds of information. And I think that's where you start to worry about access. So I think that's potentially more of a problem, at least on our side, going into the future than it has been with the existing work. Oh, sorry. And then the final thing on external validity. Yeah, I mean, I think, of course, always, right? Any 200 village randomized control trial is by no means guaranteed to tell you something about like other people in the same state, let alone countries away. I think the way that I see this work is that sort of demonstrating a proof of concept here that an effective forecast can have the potential to move people's information around. But I think that's also why we want to then continue to experiment as we scale up, right? So we don't just go from, hey, this worked in a tiny setting to full scale without additional testing. As I very briefly mentioned, one of the things we're interested in is understanding whether there are price effects. You could imagine that if every farmer switches from rice to cotton, that really changes the output prices that they're receiving and the prices that buyers are paying for those products. And that potentially has its own set of interesting distributional consequences. And so that's, I think, a reason to actually conduct a follow-up experiment rather than just scaling, because we think that there are other forces at play that don't show up in the small experiment, but might be revealed in a larger scale study. So that's why we're kind of excited to analyze the results of that follow-up. It's on my desktop right now. I'm just waiting to look at some of the files.
Yeah, so I can follow up on that, also going through these three questions. So the innovation that we study is actually directly aiming to overcome the trust issue. With index insurance, it's such a black box, and it's so difficult sort of for farmers to understand, why am I now getting a payout, or why is my neighbor getting a payout, and why am I not getting a payout? Farmers have been asking, can we speak with Mr. Satellite about what the determination is of the index in terms of whether payouts are being issued? So picture-based insurance is really directly aiming to make that more transparent. Now, I do think that there's a trade-off when starting to use more AI in this type of solution, is that also it becomes less transparent. And so although our implementing partners see the use of AI as really crucial to speeding up loss assessment, because having experts manually when there's claims going through them, that can take long and could delay claim settlement. At the same time, the use of AI to automate image processing could make sort of the process more convoluted. And so what we do think is important is to use a combination of these two, and that there's always you know, that if in case the AI is predicting, okay, this is very clear cut, there's a drought, automatically issue payouts. But if it's not as clear cut, if there's more uncertainty in the model, then still having that human factor to go through it. So I think that's how we are approaching this question on trust. On the external validity piece, this is exactly why we are testing it in multiple countries with different programs in different settings. And it's very interesting to see that we indeed find different results in terms of investments, depending on how the innovation is being introduced and what population you're targeting and what the main barriers to investments are. So we see across the board, across different countries where we're working, that the innovation is increasing take up. But then the effects on agriculture investments are not the same in different countries. And I think that's really where the questions around, you know, external validity or just understanding the context and the main barriers and what are the main barriers that de-risking is addressing become just very important. So that's on external validity. On the question around the digital divide, I think that's just super important. And somebody also asked a question about this in the chat, you know, sort of, is smartphone penetration universal? And in our case, it is not. And this is exactly why our implementing partners are working through agents who are sending in the photos on farmers' behalf to make sure that the solution is inclusive. Now, that also comes with its own costs. And in India, it's more cost effective, I believe, because there's already loan agents on the ground. And so that structure is already there. Whereas in Kenya, where we were looking at a standalone insurance product, a whole network of champion farmers needed to be instituted, which is a lot more expensive. But we took that very serious from the start of our studies to make sure that there was an inclusive approach.
Now, only a few minutes left. Let me also chime in. Maybe I'll start with the digital divide first. Yes, we have to admit that you know, access to smartphone is essential, but we are surprisingly seeing more and more cases where at least someone in the household will have a smartphone, and then there is a lot of sharing. So oftentimes women farmers will have access to a smartphone, maybe from their spouse at a certain time during the day. And so we are seeing more and more in the data that farmers are using FarmerChat directly. Also, extension agents that I mentioned earlier, oftentimes they do have smartphones because that's almost like part of their work, right? And so they do share information that they get from FarmerChat with a lot of farmers that may not be either digitally savvy or may not have access through to a smartphone directly, right? So there is this kind of indirect effect as well. So that's in terms of the digital divide. Oh, another thing I should mention, that we do have some agreements with telecom companies to provide a data bundle for free when FarmerChat is used. So it's free to use for farmers. They don't need to use any data. So that's also very important. And in terms of accuracy, of course, that's huge for us. And we do have, I'm not even going to go into that, so many different technical evaluations and tests that we are constantly running in the background to check the validity of responses. And really interesting, what we're also doing is hiring experts, agronomists and extension agents to actually review and evaluate a lot of response, question and response pairs, like a really large number of them, so that we can fine tune the model. So then that information is fed back into the model to improve it. And then, of course, information, the response does not just grab anything that's out there from the from websites or from the internet. We also have curated, in addition to some more open access to information that's out there, we have a curated set of manuals that we get from government partners, from call logs that we get from extension agents. So that information is trustworthy. So those are a couple examples of how we make sure that the information is accurate. And of course, we constantly ask for feedback from farmers.
Thank you. To wrap this up, let's do a quick round of one final question where you can add anything else you would like to share with the audience today. Vinny had a question in the chat about the role of in-person extension agents. So I think that's a great question to pose to all about non-technical enablers. The focus has been on digital technologies, but of course we know humans are always in the loop for these technologies that we've talked about. So if you have any comments on non-technical enablers and anything else you would like to say to the audience, and then we'll wrap up.
Yeah, so I think on my end, the human factor, indeed, like I also think in terms of claim settlement, it's just super important. I think also on the extension side, it is important to keep that human element in there. But the reality is right now that extension agents are only reaching a fraction of the population. And so by having extension agents using these digital tools, and also farmers being able to independently access some of the extension information using digital tools, hopefully just the number of farmers and the reach can be expanded. But definitely it's important to keep extension agents in the mix, and for this to be a tool for extension agents to become more efficient and sort of reach larger numbers of farmers in one go. Yeah.
Yeah, just to add to that quickly, I think one of my favorite quotes from one of the studies is from a farmer who said that now it's like having extension agent in my pocket, right? So it is easier for them to get information that before they had to make a call, for example, to their extension agent, they may not pick up, right? But of course, there is still that relationship, and as I mentioned, it's not replacing extension agents completely, right? It's actually improving their kind of performance, because also for them it's time saving, because they may not need to look in the manual or call their supervisor. That's something we hear about as well. It's time saving technology for them, and they serve a really important role to validate this information, and at times even like explain what is the pH level in the soil. So they still perform very important function, I think. So, and it's a complementary, it's definitely not I think, completely replacing the mediators, yeah.
Yeah, I don't think I have anything deep to add to that. I'll just echo what these two have said, that I think, technology is not going to replace extension agents. And in fact, agricultural experts and extension agents are core to making sure that the technology is effective and can be widely disseminated. So I see this as a collaboration going forward.
Thank you. Huge thanks to our three speakers today. And we hope that you join us for our next two webinars. Next Thursday, we'll hear from Tavneet Suri and Shweta Bogali on microbial fertilizer and cold storage. And then on October 23rd, we have another session on groundwater management. So stay tuned for the rest of this series. Thank you for joining. And again, big thanks to Tatiana, Fiona, and Berber. I hope everyone has a great day.
Thank you for having us.
Thank
Bye-bye.
you.
Yeah, thanks.